All right. Good morning, guys. Second half of the morning. I'm getting things fired back up here. I thought it was interesting as I was looking at my Thinkorswim charts to notice that the clock had frozen at some point during the day. I don't know why it is doing that, but that is the second time I've seen it happen this week. I think it once was last week. So I'm just going to restart Thinkorswim real quick, and then we will get back into today's discussion. I assume we have good audio and everything, so let everybody kind of file back from that break. And then we will get into the second half of our morning. Excellent. Thank you, Ben. And you know, Bob, it's really fine, or it's weird, rather, because Thinkorswim still seems to be acting imperfect. I mean, I haven't had any platform glitches throughout the entire morning, but I was thinking, what time zone is that? And then I noticed the minutes weren't right either. So we'll restart real quick, and then we'll see what's going on this morning. It's today is honestly exactly what I thought it would be. I thought the 4-hour squeeze in the S&P would fire long. I thought we would see it push up into that 73 handle. All of that is hit and then some. Now we just have to decide where we're taking profits versus where we can be getting some fresh exposure. Okay, so let's get these charts lined back up, and we'll start taking a couple other positions that we can look at. We've covered everything that I am in this morning, so everything that I've got on, you guys know where I stand with it. Now we just have to start deciding if this is a spot that we want to get more exposure. The S&P is up 34. It does make it a little bit difficult. I also think that when you start looking to ideas like this, you know, extensions aren't really going to be very helpful in these spots. I really don't see much that I can do with the S&Ps other than just kind of stand there. And hopefully, those of you that haven't seen the 4-hour squeeze before, you know, now you know what we're looking for from these signals. So I don't. There's too many things going through my mind in the S&Ps right now to make any other helpful comments on it. So let's just skip out and let's go find somewhere else where we can try and participate. So what I will do with these spots, and no charts yet. You guys should definitely be seeing my charts. So let me know. That's the only comment that I've seen from that. Yeah, so I'm going to keep going. But Russell has made a new high. Nothing to do with that. Nothing to be buying at those current spots. Everything else is just firing on all cylinders. And of course, bonds down there at the lows. It's just a matter of saying, okay, this is all great. This is exactly what we wanted to see. But I'm really not that interested in chasing markets. When we come down and take a look at Facebook, this has been cooperating as well. I'm going to look at our existing positions and just kind of start working around these. Remember, I like Facebook quite a bit, but the reason why I didn't get overly excited about putting fresh positions on was because we didn't have a whole lot in the way of a squeeze. One of the ways that I'll be going through markets, and because this morning we took some time to get a few fresh positions, discuss the wins and whys for a few of them. I want to get a little bit more Netflix. You know, we picked up that directional call just a moment ago, and I had said, okay, let's pick one up before the break, and then let's see how it's doing afterwards. Looking at Netflix now, not that it's a big deal. You know, 15 minutes, you can make or lose money on that just off noise. But when we look at picking up the 139, we got that right there on $5. Now it's trading up into 535. So I'm comfortable with that. I should probably have a little bit more size on here. But given the various areas that we have to focus on today, I think I'll just kind of keep moving through these with you. Suffice it to say that Netflix is one of my favorite tickers. I think it has a ton of opportunity. And if you want to put on more size, I always use that joke. It's a comedian. My family listened to it when I was 6, but it's like, how big a boy are you? You know, just get your position size. So whatever you think you can handle with Netflix, I cannot tell you how much I like it. We've looked at a couple of ways of putting on some positive put spreads. We bought some calls. And if you want to try and level out the position to be a little bit more theta positive, Just coming back to look at this series that we did in the 10th of March, I think this is a fine place to look to it. This morning we started getting into that 143, 140. So a couple of ways of doing this. If you wanted to pick up a few more of those, come down to your order submission tab, find the orders that have only been filled. So as you scroll through this, you can kind of see everything that we've been doing this morning. And then you say, okay, there's that series where we sold the 143, bought the 140 for the 10th of March. Just right click on that order, create a duplicate order, and now we're right back in the spot where we can generate a few more of those. I'm going to look at selling 2 at $1.10, and this will tack on to the existing bullish exposure that I have and help complement it with a little bit more positive data. I'm going to make note of that right here, and I will make sure that you guys have this available to you at the end of the day. Remember, sorry about that. Sometimes it takes a second to get your voice going again and getting a flow, but so I've sold the 2 of those. Let me come back and make sure that I have in fact been filled, and I have. So I added on a little bit more of that bullish exposure to Netflix. I think that is getting ready to make its way for a push up into 150. And I really can't help but do one more trade. This is kind of what I was saying, how if you guys are still with us at that time, that'd be great. We'll talk about it then. But I want to go out into the next monthly series and just see what the price of this butterfly is going to be. Remember, I am focused on keeping things simple, and if you would prefer to buy a call, we can definitely look at that. But this is a setup that I've been wanting, so I'm going to pick up the butterfly at $2, and then I'm going to also look at placing a call with you. Stuff like this, and the mic should be pretty solid, Jim. I haven't moved an inch this morning, so let me know if it continues to be a problem, but that's the first of that I've seen. That's a butterfly I'm looking at. I'm going to post it just to keep continuity. Once again, please don't think of this type of stuff as saying, well, I thought it was going to be only basics. I'm going to look at plenty of verticals with you too. I think that this is worth the risk reward. I've been wanting this position, and I'm going to pick it up there. And then one last trade that I'm going to show you is a further dated call in Netflix, and then we'll move on. Remember, with this type of a position, the bullish butterfly is going to cost you less and is a lower probability strategy. When you look at the 135 calls, these are extremely expensive, and these may not be for everyone. Remember, if you have a $2,500 account, do not buy this, because if I'm wrong and this thing goes to 0, you just cut your account in half, and that is no way to be a successful trader. But it's one of my favorite charts. And I'm not going to forgive myself if I don't get some of these positions that I've been wanting. As always, remember, we are working around these and willing to scale into them. I'm getting a little bit closer to the risk that I wanted to have in Netflix. So I'm going to post this here. I'm going to post this in the presenter's post as well. And that's kind of weird, Jose. I mean, it's a perfectly stationary mic. I will try to be very stoic for the rest of today's presentation. That's what I was needing to post here. Yeah, that's very odd, guys. I mean, if you're having real issues, I may have to look into it, but I think everything is going pretty smooth this morning, so I'm just going to keep going with it. There's that last call position, and then I've got the butterfly posted. We are all good on that. I will definitely go through the Analyze tab, and I'm gonna go through the Analyze tab on everything. So kind of my idea is, look at the places that are moving. Today is an especially active day in the market, and it's always tricky when you try and host these classes like this, because you never know when are we going to have like a real calm day where we can just walk through everything and discuss it, versus these really active days where we need to be getting some positions on. Everything that I've shared with you so far this morning, I feel like that's pretty much where I want to be. I don't want to add too much more here at these kind of extended prices, but I think Netflix is due for a breakout, and I'd like to be positioned when it happens. We haven't really talked about Ulta that much this morning, but I don't think that's really something we have to get into too much. My intention on this, and then going over on how to add to a position. Well, when I added the position in Netflix, remember that it was just the addition of a fresh call option. So it's nothing, there's nothing there to duplicate. If you want to add an order that you already have on, just look to the orders that you have already filled down here, and then you can right click and duplicate those orders, and that will add to the exact position that you already executed. Other than that, when I say that I'm adding to a position, it's another way of saying I'm just putting on more risk in the same direction that I had originally specified. So what I was going to do is say, okay, after I get through the first run, and this is really just kind of taking my typical morning and really it's stretched it out by an hour or two, though it feels like it's been a little bit more compact. But what I would do after we get through the first initial run of any given morning is come back to this workspace and just go through a list of what I consider to be some of my favorite tickers. I've got a list of these that I've added to the notes for those of you that were able to take the course on Saturday. Even if you didn't, we're about to go through it now, but I do have those listed for you if it's something that you'd like to take a look at. Let me bring up the watch list, and we will just start thumbing through these, seeing if there's any opportunities that we may have not capitalized on just yet, and then take it from there. So the first that I have on the list, in absolutely no particular order, is Apple. Apple was interesting, and the last tradable signal that I saw in Apple, and yes, let me get to the logic of the butterfly with you, Jason, when we walk through the review of our positions. I'm going to take the next little bit of this morning to go through this 21 list of stocks that I like to look at each morning, what I'm looking for in the charts, and then we'll go over the risk analysis of each, and then we'll probably be about into lunch. So in that way of thinking, when I look at charts like Apple, this is all I can think about. This is all the people that continue to get squeezed from 130. Thankfully, that is none of us. But is there an opportunity in this chart? There is no opportunity in this whatsoever in my mind. And as I just said, that list of tickers is in the updated course notes. So the PDF that was provided on Saturday has been updated. If you go to your course notes where you get the recordings, where you get the PDF, all of that, it is already included for you. Because I kind of expected to have that question. So, but as we continue to go through these, and it's not enough, and it's especially not the idea of the class to look at this and say, there's nothing to do with this and move on. Why is there nothing to do with this, and why do you see it the way you do? Well, the reason why I say that is because if I look at the previous swing high to swing low, number one, it was very small. So the extensions inside this move will also be very small and have already been met. Then from another perspective, I think, how far away am I from the daily 21 period EMA? Because you can see pretty much since it crossed back up in here, that 21 EMA was always a good spot to be considering buying it. Well, at this point, if I'm buying at $140, do I want to hold all the way down into 133? The risk reward from a swing perspective just doesn't make sense to me. Okay, once we have that foundation of a daily chart, then we zoom out and just out of curiosity, see if we have any squeezes. Those of you in the chat room will remember that I had the opinion of Apple being extended at previous prices, but then I also said that I expect that 39-minute squeeze to fire long. And those are situations where you can kind of bend the rules a little bit and allow yourself to go ahead and take a position. In this case, there are no active squeezes. Those squeezes have already fired, so I just have to thank Apple for the additional strength in the NASDAQ and keep on moving. The next we'll take a look at is Tesla. Now we know, first and foremost, that Tesla has been extremely active. It had a big run into earnings. It had a big correction after earnings. And as we do with each of these charts, get your foundation off of the daily. So when I come in and look at the daily, do I feel like I have any type of a real edge here? Not directionally. The only trade that I would recommend here, and it's a little bit outside the scope of a quote unquote beginner's course, and that's why, because the moment you start talking about ideas like this, you just don't want to alienate people. I want to make this as straightforward and as user friendly as humanly possible. But if I was going to do something in Tesla, I would do the iron fly here. Not to get too much into the discussion, or just to kind of see what it's trading for, and then we'll talk about it again on Friday. Essentially, because what you're doing is you're looking at situations where you can't pick a direction. And it's not because you just can't do it. It's because when I look at the chart, I don't know. I don't know whether to tell you to be bullish or bearish in that. But if you looked at something like an iron condor, iron fly, where you were simply selling the body and then buying protection, all you're really doing is merging two verticals. That's going at a $5.45 credit. I'm not going to take that, but if I was just walking through a chart, that's the only thing that I would see to do with that. Since we're focusing on keeping things simple, let's see if there's another chart that might stand out a little bit better. Sometimes a little bit tricky on days where we've had such a strong move, because you don't want to buy too extended. That's why I spend so much time on Facebook and Netflix, because I don't feel like those are extended yet. And that's what we'd like to try to take into consideration today. And then if we look at CMG. So CMG is a little bit more on the illiquid side of things, but it doesn't, it is still something that I will trade if there is a setup. As we look at it today, it's declining a little bit below the 21 EMA, but it is still bullish because we're above all of our broad moving averages, and we're also respecting the fire line. The only Fibonacci-based study that I would see worth running here would be a retracement of the swing low to swing high, because we don't really have any symmetry. Remember, with a decline like this, or when the stock is down, I'm going to be looking for the decline that preceded the rally to it. In this case, that decline would be huge. It's this 4-bar drop that is nowhere even close to the current relationship. So if we were going to consider a trade on Chipotle, I would essentially be looking at doing something like selling the 415 put credit spread. I don't have the best setup in the world to do that, because the only level that I'm working off of here is a 618 retracement, and technically it's been breached a little bit. So as much as we might be able to spend some time there and figure out something to do, let's come back to it a little later in the day and see if it can begin to form a better wick. By forming a better wick, all I'm looking for is that this market starts to catch a bid off the lows. And if it starts to catch a bid off the lows, what's that also kind of saying? What's telling me that my 15-minute chart may be seeing those bars start to shift, the moving average is crossing through each other like what we're looking for, and then we'll have a better reason to come back in and actively pursue that. So a little bit of a mixed chart on Chipotle at the moment. Microsoft having a big day today, and this will be another spot no different than just before we took that break. We were looking at the call debit spread. I forget the exact ticker, but this is another one where this is exactly what comes to mind, because there is no way I'm going to buy a call when a market is as strong as it is. I'm not going to try and sell a put credit spread, because I don't know if I really see an attractive strike to do it at. What I would like to see is something that involves a short 65 call and being able to do that at a good price. Right now, the 65 calls that expire this Friday are only going for a quarter. If I step out another additional week, that might give me a little more something to do. I know a lot of these explanations have been a little bit more brief, but it kind of goes back also to where I have learned to respect these fire lines in such a big way. The Voodoo study set, I know you guys have heard me reference it quite a few times in this, and if you have questions on it, email me and I can send you the full webinar of, everything that the creator had to say about them. But the creator, the developer, whatever you'd like to call it. But when I look at these, I've just come to respect them in such a strong way that it makes it hard for me to craft a trade. What usually happens when you come into these levels, and you can see it in what happened on this spike back up here into 66. You look at this and the first thought is, wow, that's a great looking chart. It has ripped right through it. But then look at it a week later, already back down into those zones. Also, look at the chart, and this is not part of my designated watch list. But when you look at UNH, look how long this thing chopped at the fire line before finally being able to make its resolution. It's a little bit about how I feel about Microsoft here, where I think it will probably go higher. But I feel like if I put a trade on this one, I don't have nearly as much of an edge as I might with some of the others that we've discussed. Now remember too, that's just the review of the daily chart. Once I kind of have my bearings and knowing, okay, this is what I'm thinking, then I come down into my smaller time frame charts. This 4-hour chart directly argues everything that I just spoke about. This tells me that this 4-hour squeeze looks excellent, primed to pop to a new high. Okay, so let's reconsider. Is there something I can play off of the 4-hour, even though that is suggesting a little bit of a squeeze, or the fire line may be sitting there? The only thing I can think of still is that call debit spread. If we go out into next week and did a 63.65, even at that's just going way too expensive, because you think about what is the max profit in this vertical. The most you could make would be $2. Well, since the spread is already trading at $1.50, that just cuts so deep into your potential profits that I see no reason to do that. So even though Microsoft may continue higher, I don't know that that's an easy spot to do it. The next question would be, do you have any interest in selling a 65 put? I think a lot of these, and you can kind of see it when you sit here and you have to go through so many different ways of thinking to see if you can find something that fits your risk reward. And Microsoft just isn't doing it for me right here. So I guess if you traded the shares, you might be able to make $1 or $2 on that. But from an options perspective, I cannot let myself get long there. Part of what continues to echo in the back of my mind is respecting those fire lines. So even if it does push through it, I think it'll retrace back to it. And on the time frames, I'll show you what I like using on this. And I can include this with the course downloads as well, because I think you'll find it very helpful. I showed this. Did we show this during the class? It may have been in the chat room the other day. But this is kind of what I like using. I include the additional, here's the 195. And then this is what it relates down to into hours, depending on the platform you use. There's nothing wrong with using the 4-hour chart. The reason why I do this the way I do is because you can take 390 minutes and divide that evenly into essentially just see how those divide more evenly, where if you were using a straight up 4-hour chart instead, it's one of those things that you can get caught up in the nuances of it a little bit. But when John was showing this to me and talking about, the sense that it made to just cut this up evenly, that really seemed to echo with me. I'm not trying to look for weird things to do just for the sake of being weird. But when I can take a 390-minute bar and then make 39 perfectly clean bars, you kind of see how this works. So this is the way I would encourage you to, because when we began today's discussion, I had said, you can tweak your time frames to find a squeeze on just about anything, but you'll make yourself crazy doing it because you're going through every time frame that exists. That's not the way to do it. Have a set, criteria that you like to look for, and then you'll know which squeezes you're looking for. So when you ask, is it the 4-hour or the 195? Well, this is the way I like to do it. Don't think that, if you have a 4-hour squeeze or something, you can't play it the same way. So it looks like the index is maybe trying to calm down just a touch, which is what I always try to be mindful of as you get into the lunchtime hour, which is exactly what it is in New York right now. We've got just a few more of these to look for, and I'll kind of pick up the pace a little bit. If there's something to discuss, we'll nail it down a little bit more. Of course, for Netflix, we've already covered this in detail, and you guys know exactly how I feel about it. Remember to put yourself in a position where your monetary risk, where if we wake up tomorrow and Netflix is trading down here, I don't want you to even blink an eye. I want this to be the happy-go-lucky. I knew this could happen. No big deal. Now, if it opens up down here, that's a different plan. We'll have to kind of revisit a position in a way that we're calm and collected all the way down into support, and we can look for that resulting move over the course of the next, I'd like to see it happen in about the next 20. If it takes the next 50, we'll do that as well, and we'll review that butterfly here in just a moment. Do you? Now let me double check that level, Dirk. You said you have a snow line at 64.58. There may be different levels on this Microsoft chart. I can check that against here. I still don't know that it's going to be easy for me to structure. Yeah, and I see what you're doing. You're looking at the trade station levels that have updated on Microsoft. Interesting. Thanks for pointing that out, Dirk. That is a little different, and it's because Thinkorswim didn't automatically update those. Man. When you do these classes, you try to help people with the best, most precise, kind of technical, good-looking setups. And I still don't know that it's easy to find in Microsoft, but if you just wanted to put something on, I'm kind of curious what that at-the-money put would trade for. At the end of the day, even if we sold this 65, 64 that expires this week, a 36-cent credit, I think we'd probably make money on it. But you get into the point where you have to sell so many of them. I mean, you'd have to sell, 10 to bring in $300 while risking 640. You are right, Dirk, and thank you for the heads up on that. But it's still just a spot where it's not quite setting up for me right this second. What I like finding in Microsoft, and what I like, I say Microsoft, or the setup that I'd prefer to do on it is something like this, where you have a nice daily squeeze. You can pick up some in-the-money calls relatively inexpensively, and then make maybe $1.50, $2 on them on the advance. Trying to sell those little premiums around there, we can talk about it, but I don't know that that's really the spot that I want to tie up my capital right now. If you would like to buy it, I wouldn't stop you from doing it. And then a snow line just represents an area of support or resistance depending on how it's being approached. There again, that is something that is a whole, you could get into a whole big discussion about those. But you'll also notice that I don't have a whole lot of indicators on my charts. I really try to keep it down to just the very bare minimum of what I find to be extremely helpful. And that's why I have these voodoo lines on there. It's not for any other reason other than I use them day in, day out. If you like more information on them, you can just email me, and I will send you everything we have. We've got about another 15 tickers or so to go here. Yeah, and like you're saying, JV, it's kind of the same thing. You've got a low IV rank. You've got a setup that when you have to spend this much time talking about it, and you still, like Netflix, we spent a long time talking about it, but we knew exactly what we wanted to put on every step of the way. We layered those trades. We're ready to go. Microsoft is kind of the opposite of that. And yeah, and to your point, it's low energy. And it's such a high energy market, I just don't think it's a good spot for me to allocate my time. I would not want to stop anyone from doing it that would still like to buy Microsoft. And then remember, that indicator is actually called the ready, aim, fire. And I use that one too, here again, you find certain people you resonate with, and it's kind of like when you find a good author. Like, you don't just read all science fiction, but you find one good author you like, and you read all of his books. I really like the way that David approaches a market, and pretty much everything you see on here, with the exception of the squeeze, is either free or from David. So that's why I use it, is I just feel like I found a good technical mind, and I try to read everything from it that I can. But you're not going to find me with a new indicator on these charts every week. ultimately, the most difficult thing to master in the markets is yourself. Past that, it gets more technical. But I'm just going to continue to progress through these. Now I saw that Hog came across as a request, and this isn't part of my technical 21s, but anything that you guys want to look at, I'm happy to review with you. When I look at Hog, well, and when you ask, do you think that the Ready Aim Fire could drastically change our trading? That is a no-win situation for me, because if I tell you yes and it doesn't, well, then I don't make very many friends that way. I don't know. It's a weird question to ask, JV. Instead of me answering your question with a yes or no, follow along with us this week. And if you think it's a helpful complement to what you're looking at, great. If not, I'm not gonna force it. Not gonna force it on you. Got you on CCL also. So when I come in and take a look at the hog chart, the first thing that you'll see, and this is, so I think in three primary ways for this type of stuff, or three workspaces, I should say. My first and most broad is the three that I showed you where I've got monthly, weekly, and daily. Then I've got my second, that's my multi time frame Ready Aim Fire. They include a lot of stuff, but I don't know, that's just what I call it. It helps me remember it. And then my last workspace, I have my market internals. So when you ask me about a chart like Hog, and I look at this daily chart and I say, it looks good, but I don't know if I have quite enough information. That's where I will flip back over to that first workspace that I mentioned, and then I'm provided a clearer picture because I have a monthly and a weekly chart to reference instead of a daily where I may not be able to make a decisive decision. Okay, when I come in and take a look at the monthly, not a whole lot to trade off of a monthly. It's a little bit bigger time frame than what we like to do, but I'm still going to look at symmetry because of stuff just like that. Now this also gets tricky. You can see what I'm doing here. I'm analyzing a previous rally inside a monthly chart in relationship to the rally that we have gone through now. Look how helpful that is. If you had been bullish on Harley back here during these months, look how it hits that symmetrical resistance and has a nice pullback. That does not keep me from wanting to buy this chart. It's just a good example of how symmetry works, and it can kind of keep you in check. The other thing that I would look at is where does the 618 land here? It's already through the 618, so that helps, but you can see how when the two of them come together, it tends to create a zone of consolidation. Doesn't necessarily throw me off this trade, but it just reminds me that that's an area to be mindful of. Okay, then I come back to this weekly chart, and man, I'm glad you asked about this one because this is, it's actually at a spot where you really should be considering to buy it. And it's also something where when I look at that monthly, I really point that out to you just because it was a good example of how those patterns work. But I trade more off of the weekly and daily. When I come into the weekly, notice where you have the shift of the 10 and 34. That is the first spot on the weekly chart where I am now saying that I need to be analyzing this market to the buy side. Okay, if I'm going to focus on this being a bullish market, kind of blur your vision and look at this channel. You don't have to blur it too far. It's pretty easy to see. I say that because I don't want people to think that it has to be perfectly technical. I want you to get a way of thinking inside this. Okay, if we think that's the general bullish trend, what does symmetry look like inside that? Here is the decline that preceded the rally, measured from the high. And then we just do this with every single swing inside these parts. Not all of this chart will always give you an immediate setup, but it is just a way of looking at this to try and help keep yourself on the right side of the trade. The only other one I see here, and one last one here. All right, I finally found something we can work off of. So remember, this stuff isn't always going to be perfect, but you're using it to try and help you refine your decisions. You're also using it to complement things that you already like. So another thing that I really like when analyzing weekly charts is if you can get a close above the, and I use the simple just for reasons we'll discuss when I get to talk to you next. I don't want to, it's not a big deal. But I use the 10 period simple, a 34 exponential, and you're just about to get a buy side trigger. The whole concept, and you could almost make an entire trading plan off of just this, but just look at the idea that when an underlying, let me remove my drawings so this is very clear, but essentially what I've done for you here is point out that this swing high to swing low is exactly the same high to swing low you're going through here. What happened after that? Well, you had a move from about 48 to 62, so that's worth considering. Okay, so symmetry is helpful, and I'm going to remove the lines that we don't really need to be referencing right now. The other thing that I was going to, and I'll just remove them all for the sake of discussion here, but the other thing that I was going to tell you about Harley that I think is very interesting right here, look at the way that if you will buy on a close above the 10-week simple and then sell on a close below it, you know, that has you buying there at 52 and selling that position at 57. It's just a really nice way to, I've always learned it more from the stock management position. But of course, if you can think that there are people managing their stock in this way, then you're also saying, I've got another buy side confirmation on a close above 57.94. Now, where did I get 57.94? Remember that over here on the right-hand side of your platform, these colored bubbles are a direct representation of what these moving averages are showing you. So I can see I'm currently trading at 58.24. I'm going to have a weekly confirmed buy side setup on a close above 57.94. Great. So these are all putting the weekly chart in our favor. Not to mention, notice that you're also starting to develop a squeeze. So these are all various reasons why I think that weekly chart looks attractive. Then you come back and look at the daily. Okay, great place to continue this discussion because we do the same thing. We will hide our studies, and now you do the exact same thing. And this is probably a little bit better place to quote unquote blur your vision, because if I was to do this as a perfect channel, it's like, it's not really a channel. It's kind of a little bit of a weird pattern, right? Well, that's why you don't think about drawing the channel. You just think, this is the scope of the bearish move. What if the advances looked like inside of that? So you come right back to our symmetry tool. We're going to look at swing low to swing high against swing low, and then just continue to repeat these patterns. What this does is makes you mindful of the overhead resistance and also tries to keep you away from buying when you're right at those levels. Look at this. So, and this is where I sometimes find myself in tricky spots, but it's how I try to filter out the ones that I am going to get into. It's creeping up through that symmetry, but it's right there at it. Ultimately, what I would tell you is that this is a good looking chart to buy, but if you're buying kind of right up there against that symmetry resistance, you can't bat an eye if it pulls back down into something like 57. So overall, I think this is a pretty good looking trade. We'd have a little bit of resistance to make our way through overhead. If we're starting it right here at the symmetry, you can see how that's a little bit of a tough decision. Let's come over to the options chain and see if we can make a trade. Because I don't know that I'd be all that wild about coming out here and just outright buying calls. You know, with it being up, and another rule of thumb that I will use is that if an underlying is up 2% on the day, you should not be buying it, because then you're buying calls that already have, you know, they're a little bit juicier, and you want to try and buy them when they're a little bit cheaper. So I think it'd be a great idea to get long Harley. I really do like that chart, and I think you've got a solid setup. Let's see if we can do it on a down day. It's really the best advice I can give you on that. So if you want to go ahead and come out there and buy it now anyway, maybe step out into April to really give yourself some time to let the trade idea play out. A lot of times what I do with these when people make requests is I'll come back over and put an asterisk next to it and say, even though I didn't take a position on it right this second, that is worth reviewing. And if hog was back down around 57, 56.5 tomorrow, then I would definitely be buying it with you. there's so many of these things that sometimes go into the nuance of what a person is holding overall. Because remember, I'm all about the market being bullish. I'm all about Netflix, Facebook, so many of these others that we've been working on accumulating bullish positions. If I am wrong, and trust me, I always take into account that I could be wrong, I'd like to have a little extra capital to put at hog. No different than we were discussing, was it VLO yesterday? You can't just buy everything that looks good. You've got to give yourself a little bit of room to say, yeah, that looks good. Well, let's try to focus on buying it on weakness. Because how many times and I kind of feel it a little bit this morning, which is why I'm being careful. It's like, man, you almost feel invincible. Everything looks awesome. You've been bullish the S&Ps. We're up 34 points. That's great. You have to keep that emotion in check and treat it just like you were down 34 points. So let's give ourselves a little bit of room to work, but especially if you're a hog fan, this is something that is very much worth keeping in the back of your mind, because let me double check the weekly. Think about this. Sometimes it's very easy to get caught up in that, very technical, studying the nuances of things. But look how close you are to a 52-week high. I'm not saying that hog is going to go on and make a new all-time high, but I am saying that if you like it, consider buying it against these lows. 55 that's a pretty healthy move from where we are, but I would give it at least that before considering myself wrong, and then sell it up here to everybody else that thinks, oh, this just made a new 52-week high, while what you're going to be thinking is, sweet, this just made my 1272 extension. I am more than happy to sell it to you. That is also why I think it is so helpful to look at the amount of data that you're using. Notice how this hog chart is 1 year's worth of daily data. Once you reference how much data you're using, and then you see this high bubble populate, well, then you know that is the high for the past 52 weeks. That makes you a little bit more interested in, in thinking of playing things up to the buy side. And then hog was written up in Barron's this weekend with a negative article. That makes me want to buy it that much more. For those of you that have met me, you probably know how I am, but I loathe the media. When's the last time they did anything to try to help your personal investments? You think CNN cares? You think Barron's cares if you have a good retirement? I've just seen it too many times where people like Goldman Sachs downgrading Tesla. Come on. You know what I mean? I get so tired of that type of stuff, and I've heard from guys that I've got to work that have worked in this industry, and they tell me the same thing. They'll hear this sentiment and they'll be like, "Yeah, you're exactly right, because that's exactly what goes on." So, I don't know. I have your best interest at heart. I can't really speak to the guys at Barron's. But anyway, thanks for the question. Gave us plenty of time to talk about Harley. The only promise I ever made to my dad, which is funny because they only asked for one thing, is that I never ride a motorcycle. I was like, wow, Dad, that's the one thing. So anyway, I won't be there able to support you on Harley, but it's a good looking chart. Funny, right? Instead, I took him up. I was like, all right, I'll just drive a four-wheeler instead. We all know how that worked out. But thanks for the question. I hope that helps with the hog chart. Let's continue on down to the other list of 21 that I want to walk through with you today. Remember, I like doing these because I think 21 is a pretty manageable number. It's also a fib number, and it doesn't overwhelm you. Taking a quick look at the markets as a whole, I really think we're just getting into the afternoon kind of doldrums. My plan is to cover all of this with you, go over the analysis tab. We'll probably end up taking a lunch around 12:30 or so, and then we'll have John take us into the close. But the way that I see things right now, and another thing that I like to make note of kind of here in the middle of the day, is where are our vol spreads in relationship to the past 5 days? This is huge. You'll notice here again, why is this important? because I am looking back at at a 5-day rolling period. So of course, when tomorrow rolls around, that last day will no longer be there. But this is important because this is telling us that we have more positive volume in the S&Ps than what we've seen for the past 5 days. That's a big deal, and that suggests that this is not the top. This is just getting ready to rip everybody else up into the end of the day. I could be wrong, but that's what I see in the vol spread, and if we compare the same way of thinking in the vol spread for the Nasdaq, very strong bullish trends here. And I'd have to agree, Ben. It was solid advice. He is a firefighter, so you can kind of imagine the things that he's been through and seen that makes you think that way. I don't know. At the end of the day, I much prefer looking at the charts. But let's keep on going here. Like I said, I think today is going to end up being a very bullish day, so that should help with the Netflix and all these other various positions we've put on. Continuing on down the list, the next that I have up is NVIDIA. Now, NVIDIA, we already talked about quite a bit, so I don't really know if there makes a lot of sense for us to continue to discuss this. Part of what I want to do with this course is make it very straightforward and hopefully helpful to decide where we should be putting on call debit spreads, put credit spreads, and just the basic analysis of a chart. To some degree, too, I think you will learn a lot more by us just talking about what's going on in real life. And I think that if you're looking at NVIDIA right here, just since it's something that I look at every day, same thing. Think from the short straddle and work your way back. When you start thinking in this terms, it really flips the whole world of options trading on its head, and I think it gives you a huge trading advantage. If you were to sell the 102 straddle for next week in NVIDIA, the bet you are making is that it moves less than $4.55. You don't care if it moves up. You don't care if it moves down. You just want to see it have a smaller move than 455. That right there is the trade, in my opinion. Why do I point it out? Because I think it is a good way of thinking, and also because I cannot pick a trend in this market. There's so many charts we've looked at where we're above the 100, above the 50, and above the 2, and it makes for a very clear opportunity to sell a put. In this case, we're below the 21, below the 50, but above the others. That's where I just leave myself with kind of a mixed way of thinking. And I'm not going to tell you to sell a call. I'm not going to tell you to sell a put. Do both and give yourself that neutral exposure. I think that is the best way to play that market. Next, we have Win. I think I initially sorted these. I don't think they have any sorting at the moment. I'm just going through them as they came. But Win up again there. We looked at that call debit several times. If we put that on in the moment that we had discussed it, we'd probably be making 20 or 30 cents on it. But remember, we're not in this game to try and fight and claw through 25 and 35 cents to prove a theory. We're trying to give ourselves plenty of room for the ebb and flow to make money in this. I think our best bet is to stay back from Win right now, at least from the perspective of verticals. If you wanted to get more complicated, I might be able to find you a trade. But we still have another handful of tickers, so let's just keep going. If you guys were able to catch the free video from Simpler Options last night, we had some discussion on Disney. If you're not a member, you can at least sign up for the free newsletters, and I try to give as much good content there as I can. But this gets back into that same discussion. Where do you want to start putting on fresh bullish positions in something that is so close to its highs? Each person may give me a different answer on that. But ultimately, I don't think it does a good job of keeping an edge. If you say, okay, that's fine, that's respectable, I get it. I mean, we already have the call debit spread in here that we're working around, but do we add more to it? I feel a lot in this like I do Netflix. Remember where I told you, I was like, all right, here's where we can look at the conservative call debit because we're so close to the old highs and I just don't want to get overloaded. But just like Netflix, if you really wanted to come out and buy a call, I think that'd be a good way to do it too. I think for right now, I'm going to leave what I have with this position. And if you want to add more, go ahead. Otherwise, let's also remember too that I'm going to be trying to keep as close of an eye on this as I can into the end of the day. And if I'm wrong about the run into the end of the day, let's try to add it on at a cheaper price. But happy with what I've got there. Happy with what we added this morning to infinity and beyond. Next up is Google. And then great tip on how to look at selling a straddle for the expected move. Max, that's one of those things that when that, and it's just for me, and hopefully you guys get as much out of it as you did, but I try as hard as I can to remember the things that would click for me and think, oh my gosh, that suddenly makes so much sense. And thinking of that short straddle in that way was definitely one of those triggers for me. And then do you get into a situation which you trade to take? You have Disney versus Netflix when you have limited trading funds. That is an excellent question, Sam, and thankfully I can answer it for you very quickly. Think about it for just a second. When you look at this Disney chart, and it probably works better to come back and look at the weekly. When you look at the weekly chart, do you want to buy Disney or do you want to buy Netflix? And as I say that, I'm like, oh, it's so obvious. It may not be totally obvious, but what I'm trying to point out to you is look at that Netflix, their all-time high is $145.95. So you are $3 away from making an all-time high. Would you rather try and participate in something that's going to have the potential of making a new high and then just, trucking on higher into blue sky territory? Or do you want to buy something that's $10 away from that all-time high? When I look at those charts, it may not actually be as obvious as I thought it would, but it's a good question. And to answer your question, I would definitely focus on Netflix because I think Netflix will give you a better return. It has the opportunity. Remember, a lot of what we're trying to do in trading is not so much predict where something will go, as much as we're trying to just piggyback on the ride. If Netflix really gets going, it's going to have no overhead resistance to look at. If Disney gets going, you're going to have some of those overhead, you see what I'm saying? So to make a long story short, I think Netflix has the potential of popping into that all-time high where Disney is going to have much further to go. But looks like things are calming down here a little bit. Like I said, I will plan on taking this into about 12:30 or so to make sure we cover everything. At that point, I was going to say I'll try to set up a pullback for you, but I don't know if we're going to get one. Taking a real quick look at this Netflix chart, because see how this has started to pull back? What time frame do I think this would be most helpful on? Probably a 5, because you can see the 5-minute chart starts to show those patterns. So same thing, swing high to swing low, projected from the high. Swing high to swing low, projected from the high. Again, not perfect, but that's probably about all the pullback we're going to get. Sure feels like it today. When I make comments like that, where it's like, that's the only pullback we're going to get, how do I confirm if this in my mind is a bull flag? Or how do I confirm that, I do think it'll go higher? Come back and look at the ticks. The ticks have spent a lot of their time in that noise range. Remember, I'm pretty much ignoring anything inside this window. But what I am doing, and that's why I said this is a chart that the more you look at it, the more you'll start to notice the nuances of it. Because you say anything in between this plus or minus 600 range is noise. But also notice, where have the readings been? Well, there's one extreme reading. There's another. There's another. So is this super drastic? Is this, everybody throws in the towel and just runs higher? Not necessarily. But the tick readings that have meant anything have favored bulls. Now also notice the comparative tick. What is leading the way? The NASDAQ is at the top of the pack, followed closely by the Russell. That is not bearish in any way. So the extreme readings favor the bulls. The comparative tick favors the bulls. You might say, well, if all of that is so bullish, why are your LRC channels pointing to the downside? because what you're seeing here is the doldrums of the lunch hour. So what I try to do, and this is what I mean, it's like you could almost give a whole webinar on this chart, but what you try to do is take the overarching most important factors, which are the extreme readings, the pushes above 600, the comparative tick, which is showing you the underlying pressure of those markets. Those are the first and most important things to consider. Then into the afternoon, now granted, you'll be looking at John's charts into the afternoon, but set these up on yours, or I can walk you through how to do them. And what you want to do is watch for this gradual shift. Remember, the 30-minute will shift faster than the 60 simply because it's a shorter period. So what you want to see is once these black crossed hash lines, and see they're doing it now even as we speak, what it's showing you is a gradual shift to something like this. And then when those LRC channels confirm what you've determined from the kind of underlying, that's when your bullish trade into the end of the day sets up the best. So I hope that made sense, because I think we'll get to see that follow through into the end of the day. And if it does, it's going to be a perfect example of how to use the market internals with your day trading setups. Find symmetry on these pullbacks, analyze the internals in that way. We could even day trade it here if we wanted to. I hate doing stuff like this because it's not my intention. You know, I got in here to trade verticals and do this and that with you. But if I just covered all of those topics off of this, and then we come back to the Qs and we're thinking, okay, I think this 133.12 level is going to hit in the Qs. How do we do this? Well, maybe I don't end up setting it up as just a straight up day trade with you, but let's think of trying to get into a day trade that will hopefully close in a positive way and make it easy for us to handle. On this one, I'm going to keep things small because I've been keeping stuff small with all of this. I want to make sure you have plenty of examples to get a foundation for this, and then you can, position size as you see appropriate. But when I look at this chart and I think, man, the NASDAQ looks good, I want to buy it, I think it's going to go higher into the end of the day. Well, it tells me I should probably start buying it, but I also don't want to do it to a way. I hate putting myself in situations where I have to be right this second. I'd prefer to be in a spot where I'm thinking, maybe I can be right over the course of the next 5 to 10 days, something like that. Also consider, if we see that, and this is where, gosh, I can't tell you how helpful these voodoo lines have been for me, because, options trading in itself can be difficult, but then when I have such good levels to work against, it's really helpful. Okay, what all that means to me is that when I see this fire line at 133.12, it's not perfect for a 133 short call. What would be perfect for a 133 short call? I only even say this to hopefully illustrate the point, but what would be perfect for that is if our resistance was at 132.99, because see, that would leave that 133 call just out of the money. Since it's instead at 133.12, well, maybe we end up in the money by 12 cents, but it's close enough, right? It gives us a good gauge to work from. Okay, so we take all that and we say 132 is kind of that area we're looking for. The expected move out into next week is $2, which would carry us up and through that target, and the short 132 is trading at 60 cents. Can we get this vertical for $1? It'll probably be closer to about $1.10, $1.15. It's going at $1.23. Let's try it $1 wider. See, gosh, I want to put that on, but it also doesn't quite fit my risk reward that I'm looking for. If I went out an additional month on that series, even at that, it's a little rough. So I guess I'm going to hold off on it right now. I thought with the explanation that we had given of the market internals and kind of what I was looking at, it might give us a spot to get into it. Ultimately, I think that target looks really good on the Qs, but I also know that I'm pretty bullish the NASDAQ, so I'm going to hold off on it for me right now. I would hold off if it was a corp. Let's look at the series. And once again, remember, the reason why I'm kind of going back and forth on this is because if I was just doing it on my own, I'd skip over it and go to something else. But it's a good spot to talk about choosing your verticals, choosing why we put strikes where we do. It's just so expensive. Let's do one of them out into next week. I will keep everything that I share with you guys. I'm going to make sure that we keep track of, and you're going to know exactly what the exit plan is on this. On this, I'm not crazy about the risk reward, but I think we can pull 50 cents out of it. Let's see if we can get filled at $1.22. I'm going to go in a penny below the mid and use this as something that tries to get us up into that fire line. Remember, this is in the series that will expire next Friday. It doesn't quite fit my risk reward as much as I would like to see, but I like the strength of the indexes and I like the probability of testing the fire line in the NASDAQ ETF. But this is to buy. I have shared that there in the presenters area with you guys, and then we'll paste it over here as well. And that was done at 12:07. On into the second half of the day. And they're just, Dirk, don't get too excited about it, Dirk. You have the correct levels. That did not require a ticket to support. I just don't have that updated for Microsoft in TOS. Remember, TOS requires manual update. TradeStation updates automatically. There is not a thing wrong with your levels, and especially if you're using TradeStation, you are in much easier shape and you don't have to worry about doing those updates. And then how did you analyze your risk reward so quickly? Well, when you're looking at these verticals, and this is hopefully, part of the points that we're trying to make during these sessions, but when you look at a vertical, the core math of them is very simple. So let's say we're looking at a 130, 133. If you were to do this strike, that's going at, all you have to do is take the width of your strikes and subtract the debit paid. So if it's a $3 wide and we pay $1.53 for it, that means we're going to have $1.47 of risk. The debit spreads are actually pretty easy to figure the risk on because, let's do it again with a 5 wide. So if you come out to the 130, 135, okay, we pay $1.72 for it. So the most you could possibly lose is $1.72, and the most you could lose is $1.72, and then the most you could possibly make is the difference of that. So that's going to be $3.28. So you're just taking the width of the spreads, subtracting the debit paid. That will land you at your max profit and also help you figure your risk reward. Netflix not quite able to get up through that 144. So there again, if it doesn't happen today, it doesn't happen tomorrow, that's okay. We'll continue to kind of weather the storm there. I did get filled in my Q call, and we've posted and shared that. Just another handful of tickers to get through here, and then we will come back and run them all through our Analyze tab. So I believe we stopped there with Disney, which we already covered our position in that. And then for Google, all I try to do, one of my biggest purposes in life, I feel, is to help refine the things that I have learned from John and make it easier for beginning people to understand. I mean, hopefully, I don't know. I just think that's so important, and I preface this comment with that because what was one of that and you might wonder why I dedicated an entire slide to it when we did that presentation, but I said trade bullish charts in a bullish way and trade bearish charts in a bearish way. If you were short Google calls this morning, you were trading a bullish chart in a bearish way, and you can see how that's a tough thing to do. Now, do I think there's opportunity at the current prices? Not really. And I'd plan on taking lunch at 12:30, David. I wanted to go over these that people had a few more questions about. walk through the Analyze tab, and then we'll break. I thought about doing it at noon, but since the morning was a little bit more active, I just kind of went with it. But see, this is where you're getting into, you know, I have no problem talking through these ideas, and I want to look at plenty more of them with you, but I just don't think this is the time to be initiating new positions. For the first, 2 hours of the day or so, great. Then try to give yourself a little bit of a break mentally, and also so we can come back and have some, be looking at the close into the end of the day. So trade bullish charts in a bullish way, bearish charts in a bearish way, and hopefully you won't find yourself at that spot in Google. Another reason why I think that I have the right to say that type of stuff is because I've been in that exact spot thinking, what am I doing? Why am I short this? And then once you get past that, you say, okay, how do I fix it? How do I do better going forward? You may have also wondered when we began that Saturday discussion, and I said, okay, here's the 50, 100, and 200-day moving averages. That's because talking about stuff like that saves you money in these situations. And then how does the squeeze work in a bearish market, and how do you trade it? Well, Sam, that is I thought about joking with you and saying, I have no idea. What is a bear market? What have we been in this bull market for 7 or 8 years now? I'm happy to show you. Essentially what you do is take all of this and shift it to the opposing side. But man, it sure does feel like everything has been bought here lately. And then the broad moving averages are simple, because I always think of those as, because they are broad, they're referencing so much back data. So I don't really feel like they need to be pushed towards the, what's going on right here and now. I prefer using exponential for things like the 21, because the 21 is more here and now. Let me, what's going on today. The 50, 102 tells me more, what's the general consensus for the past 200 days. So I've got another handful of stocks here. Let's kind of keep on moving. That'll take us into the next couple of minutes. Now, remember, a lot of times, well, and remember, Sam, always focus on risk, not fear. And I know your comments just kind of off the cuff, but I know a lot of people that always, they're just always focused on fear, and it's like you're never going to be able to take a trade if you're always thinking that way. I have never really felt like a hedge fund is out to get me, per se. And then why do you have a lot of stocks in your scanner if you don't look at or trade them? I don't understand that question in the least. I have spent all morning going through stock results that have come through scanners, and I've just almost exhausted myself going through these. So I have no idea what you mean and no idea how to answer that question. It's just like, man, all we've been doing is going through scans and looking at charts and putting on trades. I don't know what else to say about that. So in that case, let's just keep on moving. When I look at a chart like Amazon, and remember, we're trying to focus on basically doing verticals. When I look at Amazon, one of the first mistakes that I used to make on stuff like this is think, oh, it's at 850. 850 is a psychological area to work spreads. That's a terrible idea. And I got away from that as quickly as I could have. So in that way of thinking now, I think more technically. When I see this chart of Amazon, I think there's nothing to do, because I'm not going to get long when I'm so far away from my 21 EMA. There is no way I'm going to short it for the same reasons I'm not going to short Google. It's another one of those charts that I think it's really a pretty quick analysis for me. If you have any other in-depth questions, I'm happy to go into them, but there's really just not anything to do with it. And then when you say, I'm not in fear, but I want to learn how to reduce risk in trading, I'm all about it, Sam, and I'm right there with you. When I see comments like there are hedge funds waiting for our heads, I just don't like people to think that when you get into this, like, oh, the algorithms are going to beat me or the hedge funds are out to get me, because it's flat not true. There are some little manipulation things that go on. There's things that you should be aware of, but I just don't want people thinking there's somebody out to get you. It's a tough way to go through life. Whole Foods is one that I like to analyze, but same thing there. No real comments on that. No setup for me at the moment. Small size and wide stops. You can always tell the comments from people that have been doing this for a couple of years versus those that may be a little bit newer. Not that there's anything wrong with it, but I think comments like that are right on point, David. And then I was referring to CCL, which you didn't want to comment on. I'll do my best to not take that offensively, JH, because remember, I'm trying to do you a service by looking at as many things as I can. Since I happen to overlook your one ticker, please don't take it personally. In that way, let me take a look at CCL for you real quick. I guess eventually we will have to take a lunch. I've just got so much to cover with you. On CCL, on CCL here, I think you've got a great looking chart. It goes back to that exact same thing that I would much rather you be asking about CCL now as opposed to when you make the break above 59. It's also a point where having these monthly charts, even though I don't necessarily use them all that often, they're helpful because you can look back and say, oh, wow, we actually are only $2 from an all-time high, and oh, we have a squeeze on the monthly chart to boot. Now, trading a monthly chart from an options perspective is tough. I usually don't buy an option and hold on to it for 18 months. But if you wanted to buy the shares, that might be an interesting point to do it. And if nothing else, it tells you that you have the wind to your back as far as momentum goes. I would also tell you that this is a decent place to be looking long because you have not made the 1272 extension of your weekly chart. I've made this comment before in the chat room where I would tell people, I go back to my daily squeezes and I would try to research as much as I could and find why am I getting into these daily squeezes that look so good and end up rolling right back over. And it was because I was ignoring weekly extensions. Well, in this case, your weekly extension doesn't come into play until 59.92. 59.92 would be a new lifetime high. It would be a weekly extension. And that's a great place to participate in that daily squeeze. So great looking chart, really not a thing in the world for me to say bad about it. Then we come back to our chain. We've got weekly series. We have April and March. Let's take a look at our volume here. The comment that I always go back to on stuff like this, JH, is that I think you could do well with this for yourself. I think this is plenty of liquidity for an individual trader. You can pick up a couple spreads here, but for us to look at this as a group, and remember, there are two distinct arguments to be made in this. From one point of view, John will tell you, buy these with low volume, and if you can catch the move, the option is going to move, and that is true. I just prefer trying to trade in a little bit more liquid environment, so if I need to get in or out, I can. Look at a lot of these strikes where no one has traded them, and even when you look at open interest, there's only 17 that are open. So I don't know if I'm going to recommend that as a trade that we can all get into, but if you want to look at that kind of for some positions that you get into, that's a great looking chart. So I appreciate it, Sam. Just remember, Jay, don't take this stuff personally. I'm just in here trying to cover as much as I can in the best way I know how. And it's not that I didn't want to comment on it. It's just trying to cover as much as I can. At this rate, I don't know that I'm going to have a whole lot. I don't know that I'm going to be able to get to every ticker that I had on the list for a review. I feel like we've established a pretty healthy list of positions. And I also feel like putting on anything else now it's not a good idea because I would prefer to get into the, little bit closer to the last half of the day, see what John's looking at in these markets, and then we can pursue some positions from there. So I think I'm good on fresh entries, and no problem, JH. We're all here to learn. That's what it's all about. So I'll tell you what, I'll do two last things. I'll look at PANW and Tesla. Now, Tesla, remember, I already reviewed. I looked at Tesla, and I just said, I have no idea what to do there from a vertical perspective. If we were just talking about our everyday lives in the trading room, kind of doing what we wanted, there might be merit to a 250 straddle, or the 250 iron fly, because you can see a lot of congestion around there, and it's just a good area to chop around. As far as selling a put or selling a call, I don't have nearly as clear of a directional opinion on that. So essentially, it's just saying that I think it's stuck at 250. I guess I could put on the iron fly and talk about how that is really no different than putting on the two verticals. But right now, I think I'll just leave that for now, and let's take a look at PANW. Now, these are interesting charts because, of course, we're down huge, and I know this was driven off of earnings. I can almost tell you right off the bat that there's not going to be anything for me to do with this chart. Let's say, and part of the reason for it is that when I glance at it and I see this fire line down here at 106, I know how prices tend to be attracted to it, and that's just kind of that's why I would avoid it, because I'm not going to short it down 22%, and I'm not going to try and buy it when I think it could continue drifting down into those prices. Okay, if I wasn't using the voodoo lines, and let's just edit the study, hide the study for just a second, and even if I didn't have these voodoo lines, why would I still avoid it? Because when I'm trying to fade a move like this, what I'm looking for is something like a 1272 extension of this swing low to swing high projected down into that. The drawing that I've given you here is about where I think you'll find that 1272 extension. And since we're so far from that, it doesn't really give me an area to think it could bounce. Remember, moves tend to terminate near extensions of previous swings. That swing is going to land you at 114.30. So it's essentially saying I think it may have a little bit lower to bleed. Not to mention, you got to think people that have been long this are just getting, I feel like it could be one of those things where you wake up to a little bit more of a margin call type situation rather than saying that this is support. But I can't bring myself to short it when it's down so hard. There's no reason to buy it whatsoever. And then the only other thing I might take a quick look at is that. And that is simply comparing this massive decline that we saw here to the decline that you're going through now. And even that would offer you support at lower prices. So if you're thinking to look for a bounce in PANW, then I would wait until it got down into those prices. So we've got about 6 minutes until the bottom of the hour. The indexes look okay. You're sitting right there on top of that very intermediate symmetry that I'd drawn in for you. And that's what we're trying to see if that'll hold into the end of the day. Let me take a look at NTAP for you, and then I will go over the butterfly and Netflix based off of the risk profile graph. And then we'll take a break for some additional fuel. So when I look at a chart like NTAP, a lot of times I feel like I have to come back and kind of ask you the question of, what do you want to do with this? Because I see it up to almost 2.5%. So I would instantly be violating my rule of buying something that is up more than 2%. I also look at it and say, based off of my most recent swing high to swing low, this has already made extensions. You're right there at that 1272 extension. And how far away are we from the 21 EMA? We are a far cry away from that 21 EMA. So stuff like this, a lot of times too, I'll say this is more of a stock traders type thing, because you can buy it here and maybe be okay on a pullback. If you come up here and buy a directional call, that can be a very difficult position to manage. And of course, we all know there's no way I'm going to short this. The other comment that I would make for you on NTAP, because remember when we looked at Harley and I made such a big deal about that close above the 10-week simple? This right here is exactly the same thing. Close above the 10-week simple. Yeah, you have to sit through a little bit of a pullback here, but those are the types of results that you're trying to capture. So think about, and just like the hog discussion, remember how I was telling you, think about buying hog when it still has a little ways to go before making that new high, not when it's already up there. So let's flip back over to our Analyze tab. I will kind of give you the long and short of what I'm thinking about in that butterfly. And then we will break for lunch. So when we come over and take a look at our risk profile graph, there's a couple steps you want to do here to narrow it down to what we are discussing. Yeah, no problem, Doc. I appreciate your patience and thank you for being here with us today. But when we take a look at positions and we want to discuss what we've done in Netflix, now I've got a ton of stuff going on in Netflix. So how do we narrow this down to, where are we and what are we doing exactly? Well, it's easy to make this comment so far because, we have looked at a lot of other stuff in some of these other series. But if I just wanted to discuss the butterfly, well, then I very quickly know that none of these matter because remember, I placed it out in the April series. Then I also know that I structured that butterfly $10 wide. So that means that the 135 call has nothing to do with the structure of it. I point all this stuff out so you can quickly see, how do I evaluate just that one spread? Well, we mark off everything else that has a shorter dated expiration. We ignore the call that we purchased in our butterfly series. And now we know these are the main 3 legs that we need to discuss. How do we get there quickly? Come back over here and uncheck all. By unchecking all, it will remove all of your positions because see how that's easier than unchecking each one by one? So uncheck all of them and then just throw your butterfly strikes back into it. Great. Once we're that far, then drag this down. And remember, anywhere that you see this double-headed arrow, notice how I'll go kind of slow. And then as soon as it transitions to the double-headed arrow, then just pull that down. Because you want to make this area big when you're making your decisions on your strikes. Once those decisions have been made, then pull the risk profile graph down where this is what we want to see. So, make the platform flexible into what you need. Once we get down to just having the butterfly, one of my favorite ways to try and help these make sense is to come over and set your slices. Slices are just these division points that we're going to see. Set these slices to break even on the day of expiration. And what this is showing you is that this is our whole zone of profitability. If we can get Netflix to land anywhere between 158 and 142, all of that will make money. The best possible scenario would be pinning at that area. And remember, another reason why I like considering this is because 150 is a big psychological area. It's got that quarter point, half strike value to it. Also, we have a fire line at that level. So a lot of different reasons to think this is attractive. Remember, we paid just a little under $2 for the spread. But if you think of it in terms of simple math, and say we just bought one, well, then you are risking $200 to make $800. How do we do that? Well, we make that, and it's very clear to point out that, this is the book math. This is the stuff that when you look at it in a book, that's the risk, that's the reward, and that's absolutely true. The only way you're going to make that $800 is if it truly pins. So what you're trying to do is buy it at 200 and then maybe sell it at 600 as that decay curve kicks up. Right in there, that's not a bad risk reward at all. And that's the main idea with those types of flies. So it's been a pretty active morning, guys. Here again, I don't mean to be short with you or anything, JW, but it's just, that's all I've been doing all morning is scanning and going over setups. And if you're hung up on looking at one ticker versus everything else we've discussed today, I just don't think you're getting the value that you were looking for. So I think that's what we've got for today, and then show a graphic of your setups. Well, the graphics are all right here. Robert, I don't know, I think maybe you're talking about this, the notepad layout of it. And if that's the case, I'm happy to leave that with you. So That's what I've got for now, guys. That takes us right into the bottom of the hour. So let's go ahead and plan on an hour for lunch. So we'll get started again at 1:30 p.m. Central Time, and John will take us into the close. So, yeah, take a little break, enjoy your lunch, and we'll head into the close. Thanks again for starting your day with me. And if I don't talk to you again today, I will be back first thing again on Friday. So thanks again, and I will talk to you soon.